Hey everybody, it's Jeremy here with kind of a special Tuesday afternoon market update. Anytime you have the market sell off 243 points, most people have a little bit of fear and they say, ooh, I'd like an update. So I thought I'd help you guys out a little bit. I want to talk about a couple things. More importantly, not just the fact we sold off 243 points today, but the fact that it's completing some pictures that we've been watching. This is the Dow Jones as you look at it here in kind of a large perspective. And what I'm wanting you to draw your attention to right now is notice right up and through here this trend line that's been moving along through here since really this past summer, since in June. And this has been the little channel, ascending channel that the market has been moving through. As I zoom in on the details here, watch what happens right up here at the resistance area, 13,650, 13,700 roughly. What's happened is the market, this is the Dow Jones, has created a triple top chart pattern, okay? Now, this has been forming. It's also a little bit of a leaning triple top. You notice that this is not getting all the way back up there. So this shows that the momentum is waning and it's starting to dangle over to the right side here, indicating a reversal. Now, anytime you get a triple top, this is a very, very solid reversal signal. I've been watching this, curious what was going to happen with it. We really had no solid indication that it was going to reverse until Friday. There was the possibility as we started top out here, and that topping came into play. We started to get some really solid reversal candlesticks, obvious weakness coming in as we could not get back up here to our resistance area. And as that weakness came in, we had a big sell-off on Friday. Now, yesterday, I'm going to zoom in a little bit more details here. Yesterday actually caused a little bit of pause because while initially at the beginning of the day we sold off way down here below our support level, by the end of the day the bulls came back in and we ended the day with this doji candlestick. Now, whenever you see a doji candlestick at a support level with a long lower shadow like this, very, very often the next day the market turns and does this. In fact, that's what the momentum it really is being indicated in this doji with a long lower candlestick. The fact that today the opposite occurred really shows a lot of weakness. Now, this does not inherently mean that the market has to go down drastically tomorrow. In fact, after such a big sell-off over two of the last three trading sessions, there's a decent chance that the market would actually bounce back up here and test this old section up here around 13,250. But in terms of momentum for the big picture, what this does after today's sell-off is it really solidifies the likelihood of a bearish reversal coming into play. Why does it solidify that? Well, there's several reasons, a couple of which I've already talked about. Number one, we've got this triple top chart pattern here. That triple top chart pattern has broken every neckline, no matter how you draw it. If you draw the neckline off of this low from a couple weeks ago, if you draw the neckline as an angled neckline, any way you look at it here, we've broken below that. So chart pattern, terminal reversal chart pattern has reversed. It has broken the necklines. This is a signal that the market has reversed. The other reason that this is a signal the market has reversed is a breaking of the trend lines. This was our trend line. You can break down here just a little bit, and if it comes right back up like it did last week, it's not really that big of a deal. But when it breaks below the trend line and it keeps going, that's a problem, especially if you've got a terminal chart pattern in there. Next reason this is a bearish signal coming up in here, a very bearish signal, is the fact the way that it topped out up and through here. The way it topped out, we ended this move here after some bullish candles. We ended with a hangman followed by a very, very small doji, which really is almost a spinning top, I just said that backwards, a really, really small spinning top, which is almost a doji, and then a full-on reversal here. Now, this in and of itself is not an evening star reversal candlestick formation. However, sometimes what we do is we actually blend these candles together, and if you were to blend the last 4 trading sessions, this is a very solid reversal formation. Even though it's not specifically a pattern, that is a specific type of a formation. If you were to just pull it together, you can say that's for all practical purposes an evening star reversal. Very, very solid pattern there. As that formation starts to shape up, as it breaks through the trend lines, as it starts to complete the reversal pattern in terms of the chart patterns, this is becoming a very, very bearish signal. Then you look at the candle formations themselves, and we've got 2 very, very solid long day bearish candles that came into play. Now, Friday we had really high volume. The volume is not registering as high today. Watch for volume to come in. If the volume comes in with substance here, you can really anticipate that this market's going to fall very quickly. If the volume retreats and it stabilizes, then you don't have to worry about anything. But if the volume comes in to support this move, which after today, as traders get home, investors get home, they see what really happened, there's a good chance tomorrow morning we might see an influx. It'll go one way or the other. Either people see buying opportunity and they jump in buying, thus driving the market right back up, giving us a good sized bullish candle, or they will really start to panic and we'll really see the volume coming into play. If we see that volume coming into play, be very, very cautious. Now, next thing I want to show you here is as we move through these indicators, watch what's happened. In terms of our short-term moving averages, we just broke down below the 50-period moving average solidly for the first time in several months. The 10-period and the 20-period just starting to cross over into a bearish trade, suggesting that this is a bearish reversal as well. Now, if you come over to our long-term moving average, watch this. This is interesting because it's one of the justifications that this could be the support level. We do have a support line right here, and that's where the 100 comes into play. So that really does add to something I'm going to talk about in a second here, which is the fact that the market could stabilize right here in this very location where we are. So before you freak out and start selling everything you own and recognize where we are in the location of the market, this would be a fairly, within a few points here, a logical support level. This might be the turning point right here. So again, just want to reemphasize that. Now, let's look over here at these oscillators, and this is always an interesting picture. In terms of the oscillators, we actually do have a lot of momentum that's starting to swing back into the bearish direction here. Notice the stochastics after this last swing. This is always an interesting story here. Notice how the stochastics did not even come close to getting back over into overbought. And so when the market's making some peaks up here and the oscillators are not following along, same thing with RSI, did not even get close to being overbought. What that's showing is it's showing that the momentum is swinging down, and that tends to justify or should say foreshadow some sort of a reversal that's coming into play. Same thing with the MACD. MACD is very much in bearish mode right now. The lower line here, the blue line I should say, trading below the orange line, indicating that we are in a bearish cycle. And then as you take a look over here at the Bollinger Bands, this is maybe one of the most important signals that we can see. Take a look here as we've broken below this lower band and we're starting to see the bands expanding. It's not really a squeeze play, but it's so similar to a squeeze play. Very, very similar. Obviously, we've had a very strong bearish break in terms of the volatility here, and that justifies a lot of bearish trades. And then finally, look at this. This is one of the most important signals here. As the parabolic has flipped over to support the bearish trade, ADX is turning up, suggesting, hey, this bearish trend has a lot of strength. So as we look at this, we look at our 5 steps of confirmation that we always look at. We've really got a perfect storm that's developing here. We've got a bearish reversal pattern. We got trend lines that are being broken bearish. We've got all sorts of indicators that are signaling bearish. We got candlesticks that are signaling bearish. Everything really is shaping up for a substantial bearish reversal, which probably would lead into the end of the year if this shapes up. Now, let me give you a little bit of context in terms of what we can expect in terms of how this is going to play out. One way that this could play out, and I'm just going to lay it on the table. One way this could play out is we could just reverse. We could have a bullish day tomorrow, and this market just goes bullish, and we're all the way up, and it just runs on forever. That's always a possibility. That, at this point, is the least likely possibility. A very high likelihood of probability is that the market would maybe stabilize right here around this support level where you see it's just north of 13,000, where we got this support level that's running through here. That coincided, as I showed you just a moment ago, that coincided with the 100-period moving average. And if the market stabilizes here, expect it could be over a week or two. It could be very quickly. It could be in an afternoon. I mean, it can do it very, very quickly. But expect the market to come back up and test this previous support/resistance area right around 13,300. This is so typical. I mean, it is more often than not when you have a break of a major pattern like this, it's so typical for the market to come down, hit a support level, come right back up and test that previous support as a new resistance and then continue bearish. Now, if we see that formation, that is essentially, that's like the pattern you're looking for to suggest that this is a primary trend reversal, at the very, very least, an intermediate level trend reversal that could last several months, anywhere from 3 to 6, maybe 9 months. So this would be a major trend reversal that you want to pay attention to if this were to shape up like such. And then, of course, the third outcome would be that the market would just continue selling off very rapidly. Which one's going to happen? We never know exactly which one's going to happen. What I can tell you is this is the critical space to be looking at right here. right here, just north of 13,000, about 13,050 or so. That's going to be your support level. I'm going to suggest out of the two of the last three trading sessions, we've had 200-point sell-offs. There's a really high likelihood that we would just come right down here, sit on that support, and then the trading will figure out where it's going to go. But watch what that really means for the election. Just take a look over here. We're only 2 weeks away from the election. This could actually have a substantial impact on the election here, as the market is rolling over, getting into earnings seasons here, get another couple of bad earnings reports. A lot of fear is going to come in. There's already uncertainty in the economy. I wouldn't be surprised at all to see this thing go all the way down here to this red diagonal line. Now, what's that red diagonal line? I'm so glad you asked. Let's zoom out. This red diagonal line is actually the trend line that began way back here in 2009 when the market started to recover. And that would be a very logical spot for the market to retrace down to. Really, the truth is it's not that scary. When you look at it in perspective, it's kind of like, oh, yeah, that's the next spot it would retrace down to. But for individual traders, it could be very scary, especially leading into the election. That's why I say it could really have an impact on the election. Also, the fact that we have a triple top here could set us up definitely to have more of a reversal. In fact, this could be a substantial reversal. You never know exactly, but certainly could shape us up for a move that, if that line breaks, then we're really in a full-on reversal. And that's the last thing I want to point out here in my discussion. If this trend line breaks, this one that I just drawn the line across here, if it breaks, so in other words, if the market starts to sell off more and we break down here below about 12,750, give or take a few points, this is a pretty macro scale, but if we break down below this level, we really are breaking primary trend lines that have been in effect for several years, going all the way back to February 2009. And if that trend breaks, then it's really over for a while, most likely. Now, it's not a guarantee, but what it really indicates from a technical standpoint is, hey, we're going to have a major substantial correction here. And, I'll just tell you the targets, if that were to happen, and that's, probably 2 or 3 weeks out if that happens. But if that were to happen, we're probably looking at 12,000 as a minimum target for where the market would sell off to. And then beyond that, you're looking at 11,000 all the way down here to 10,500. That puts us in competition with last fall, where we were trading around that 10,500 range. And then we would most certainly probably stabilize there. That's where we could be at the end of the year. That would be a logical intermediate correction. But the reality is, for any of you who know anything about Elliott Wave, this makes a whole lot of sense to just sit here and count waves and say, that looks like a three-wave cycle. If this really is a three-wave cycle, as I've just, on a broad scale marked that out, then this should be a large-term corrective cycle. So there's a lot of reasons to be bearish. That's the bottom line here. A lot of reasons to be bearish. Not a whole lot of reasons today to be bullish. This could all reverse in the next 3 or 4 days, and we would update this and address it as such. But at this moment, I do want to just address it and say that we have all the right criteria for a full-on bearish reversal. At the very minimum, an intermediate trend change that would take us down to somewhere in the 12,750, 12,800 range. A lot of it depending on where this trend line comes into play, right up and through here. Got a lot of support possibilities up and right in through here, 12,750, 12,800. That would be my minimum bearish target. Again, on the very, very short side, watch for a quick correction, possibly testing this 13,330 range. Watch for that because that could be coming up in the next 2 or 3 days very, very quickly here. If I can just really fast go over here, I know this is getting a little long, but I want to talk about the NASDAQ, and I want to show how this picture is a little bit different and potentially a foreshadowing difference here. Notice what's happened. If I zoom out just a little bit on the NASDAQ, we do have 3 peaks, but these 3 peaks are all going downhill. Now, what this tells us from classical technical analysis is it tells us that the trend was up, and now we've got a downswing, an upswing that's lower, a new low downswing, and a newer lower upswing. This is, by definition, a trend reversal on the NASDAQ. It's already occurred. It's actually preceding the Dow Jones, because with the NASDAQ was failing to get to those same highs that the Dow Jones was making. That may be suggesting exactly what we're going to be seeing here, which is a full-on reversal here. Now, I do want to point out that in and of itself does not mean we've got a full-on bearish reversal. Take a look. 2 interesting things to point out on the NASDAQ. Number one, we've got a little trend line here. It's not my main trend line, but it is a smaller trend line here. And that's where we stopped today. If I zoom in on that location, we didn't just stop there today. We stopped there with basically a doji candlestick here. Yes, it shows we're down 26 points, but that's because we closed way up here yesterday and we just gapped down here this morning. But when you look at the candlestick itself, this is a doji candle at support. This could easily turn into a bullish move. So this is the nature of markets. This is why we learn our technical analysis. We learn the probabilities, and we look at them and we say, okay, what's the possibility of which way this thing could go? What I'm showing you from a broad scale is all of the bearish signals that we have that could be a substantial bearish reversal, and I just want to bring those to your attention. Let's come over here and look at our moving averages, and let me show you. I just scooted my chart over too far. There we go. Let me show you what's happening here. If you can see this, come on, computer, let's zoom in. There we go. As you can see it here, these moving averages have all started their bearish cross. So that's very negative in terms of the bullish trend. That's telling us that, hey, this bearish trend is ready to go, rip roaring and happy here. We've got pretty good volume as you look at the last several trading days here. Volume has been increasing during this bearish cycle. Look at the long-term moving averages. Look at this. We're right on that 100 and the 200 period, just like we were with the Dow Jones. So this is interesting because they've come back into parity here as the Dow Jones has retraced down to the 100 period, and now so is the NASDAQ as well. Now come over here and look at these oscillators, and this is always interesting because the oscillators are actually a little bit more oversold for the NASDAQ. Now, what does that mean? Does that mean that the market has to turn around and go back up? No, it doesn't. But it does suggest that at this support level, being oversold, this is the location where it would turn back up. So that's why we want to be cautious about this. That's why I'm sending this out ahead of time before we wait and see what the market does. We're going to send it out, and I'm giving you some possibilities because we're at such an important turning point here. When you're getting into a new bearish reversal, this is often what stochastics look like. So we'll start that reversal process there, and then stochastics gets oversold. We might have one good little bounce, and then it's just kind of off to the races. But what happens so often with stochastics is we'll get down here into oversold, and we'll just stay there. So it's very important you look at that. Let me just point out January, this past year, January, February, into March, look, we were getting into a bullish trend, and we just got overbought, and we stayed there. Okay, so this, and the converse of that, in a bearish trend, we would see the exact same thing happening here with stochastics. So I want to warn you about that. The other thing I want to show you here, take a look at these Bollinger Bands. Notice how the Bollinger Bands are very much showing the bearish trade. We're well below the averages here. The bands have started expanding actually last week. Really solid expansion 2 days ago there. And we're just basically walking the band in essentially what's shaping up like a Bollinger Band trend trade. And then finally, let's take a look at this ADX. And look at that. ADX really likes this trade. It says, hey, this bearishness has strength. So again, yes, we are at a pivot point where we could turn and see some bullishness coming back in. But all the indications, all the signals, everything really suggests bearishness coming into the market here on a larger picture scale, not just a weekly swing, but on a bigger intermediate, 3 to 6, 9 month swing, possibly even on a primary trend. Now, let me show you something interesting here. That same move that you saw on the Dow Jones, where I told you it was the primary trend, here's that move on the NASDAQ, and notice we're not that far from it. So if we break down here below maybe 28,850 2,850 is what I'm trying to say. We break down roughly into this territory right down here. We will have seriously closed below those trend lines and below the relative support levels. And that does also suggest a primary trend reversal, which we want to be very, very cautious of. Now, just finally, I'm going to hit over here on the S&P really quick. And here's your S&P. S&P is very, very similar to the Dow Jones right now. Kind of have that triple top thing going on here. A little bit more structure to where it really showed the solid break yesterday, but the really solid break today. We are back at the support level of right around 1,400. So this could provide some support, and that may indicate, looking at all three of the indexes, that may indicate what the overall market's going to do ultimately as we look at those things. Now, the next thing I want to look at, if you don't mind, I'm going to go back over here to the Dow Jones, and I realize this is getting a little long, but I feel like it's important to discuss these things with you. So I want to come back over to the Dow Jones, and I'm going to go off of a daily chart and come over here into a weekly, because since I've mentioned it several times now, we are potentially looking at a primary trend reversal. And if we're getting into a primary trend, for those of you who are not familiar with the primary trend is the big picture trend. It can go from anywhere from a year on up to several years. And in this particular case, the primary trend we've been in has been in play since February 2009. Okay, so here's the trend, and you can see this trend has gone quite a ways, and it's starting to become a bit exhausted on a weekly scale. So now I'm over on a weekly chart, and what I want to show you is I want to show you, if I zoom in here on these details, how we are on a weekly chart just pounding that resistance right up here. And you say, well, what's so substantial about that resistance? Well, I'm glad you asked that question. I'm going to zoom back out, and I'm going to show you exactly what's substantial about this resistance. Here it is. We're going to come to the left, marking that resistance, and boom, look at that. These were the left and the right shoulder resistance points in the reversal of 2007, 2008, leading into the financial crisis. So this was a very, very formidable resistance level that we're running into. As we were approaching it, I did make mention of it, and I made mention that could be an issue. On a weekly chart, what this might play out as, and this is potentially a 3 to 6 month forecast for you guys, but what this might play out as, I'm going to draw that line back in here so you can, no I'm not. We'll try this one more time. There we go. What this might play out for you guys, on a daily chart, you guys saw the triple top that was shaping up. Well, let's just suggest, what if this thing stabilizes, maybe even comes up and makes a higher high, possibly around 14,000, possibly 14,000, a couple hundred, somewhere right up in here, and then it comes right back down, and it could do the same thing again. Now we'd be getting a head and shoulders on a weekly chart. This looks a lot like what happened in 2007, 2008, matching those same all-time highs. Anytime you get to an all-time high, it always becomes a really substantial resistance, and we are in that territory right now. So I really want to warn you, and I'm not saying sell everything you've got. I'm just saying be very, very cautious, because this is the locations where things start to turn, and as we see potential turning signals, it's really important to pay attention. So before the primary trend on a weekly chart reverses, I would expect to at least see some rally. I do want to give you a little bit of hope there. I would expect to at least see some rally, maybe forming a double top, or possibly, as I just drew out for you, forming a head and shoulders pattern. However, you need to know this. It does not have to happen. In fact, it doesn't even need to happen. It would just make a lot of sense for it to happen. Another way that this could shape up, let me just show you kind of another less optimistic viewpoint, would be for this most recent peak, the one that happened a little bit earlier this year, to actually be the left shoulder, and the peak that we're making right now to be a right shoulder. We could see a substantial sell-off and a lot of volatility driving the market down to about 12,000 or so in the next, between now and the end of the year, and then possibly bullishness coming back in, driving us back up into 13,000, and then the reversal. That would be a very large scale head and shoulders, and that would almost guarantee a huge bearish reversal. And the reason it would be so huge is because it's a weekly chart. These are very, very macro scale that I'm looking at. Now, I'm not saying that's going to happen. All I'm doing is I'm throwing out the possibilities so you have an idea as you're dealing with your analysis and as you're looking at things. It is valuable to take a look at this picture. It is very valuable to recognize that since this trend line has been going on since 2009, the overall volume has been declining. It has not enjoyed this trend. For the most part, there's a lot of fear in the economy, a lot of fear in the market participants. The only time we've had substantial volume during this time frame was during the sell-off in 2010, during the sell-off of 2011, and we're going to see what happens right here. But you look at the time frames on this, you look at the trend lines, you look at the chart patterns, you look at the indicators and everything else, and I'm going to suggest that we are ripe for a bearish move, regardless of what occurs here. Yes, this trend could continue bullish, but this would be a very ideal location to see some sort of a bearish correction that could really set a lot of people back. And nothing wrong with bearish moves. Contrary to popular belief, bearish moves are just part of the cycles of the market. But if you're not expecting them, they can be devastating. And so hopefully this has been beneficial for you. Hopefully it's given you a little bit of insight, and hopefully it at least gives you a structure within which to consider your trades, and I would hate for us to have all these bearish signals and nobody recognize them. So hopefully it's been beneficial, and we'll look forward to seeing you guys in class. And of course, tomorrow we'll have our regular Wednesday market update where we will see exactly what happens tomorrow. But this is more of a big picture market update, just kind of giving you a broader picture so you have some structure as you think about it. Also, I think it's interesting with the election coming up in just a couple weeks. This really could sway the election. If we were to see a major major sell-off in the next 2 weeks, I think that would probably solidify the momentum of this election at this moment. So we'll just see what happens. It will be interesting, but there you have it, technical view on the overall macro elements of the market at the current moment. Okay, happy trading to all of you. We'll see you next time.